All right, so now let's talk about two indicators, volume and ATR. How do I use these? What are they? And they're basically pretty simple, but they're very key to the strategy. So right now I'm just trying to expand these a little bit. So the first one is volume and volume average. So if I zoom in here and hover over any of these days, it tells you how many shares trade for the day that you're hovering over. And if I was on that execution time frame, then it would tell you how many shares traded in the specific minute, right? Because we're on that 1 day, 1 minute now. I don't really use volume or ATR for the minute chart, so let's just go back, but I just want to kind of demonstrate that. So let's say, right, on this day, 2.7 million shares traded. And then there's this beige number here. That's how many shares trade on average in the past 50 days. So in the past 50 days, on average, the stock has about 1.7 million shares traded in a day. But then this day that we're looking at had 2.7 million. And you can also kind of see that there's this beige line running through the chart. And on this day, the bar extruded like over that beige line. So it shows that there was more trading activity, right? More volume than normal. Volume quantifies interest. It tells you how much interest there is in a stock. So like this day, for whatever reason, there was a ton of selling activity or a ton of buying and selling activity. Ultimately, the stock fell, and there were a lot more shares traded than normal. 8.48 million traded, and on average, it's only about 1.9 million per day. So likely some sort of news came out. In fact, I can go ahead and search for GH here and look for, and here it is, right? So on 5/23, the day of this big sell-off and that huge basically volume spike, Guardant Health shares move lower on $350 million public offering. So a public offering is when a company raises money. We're not going to dive too deep into that, but you can basically see that they raised money, and that's why the stock fell off. The shareholders got diluted, and there was a ton of activity. So you can kind of see, as I said, volume quantifies interest. On this day, there was a lot more interest in the stock than normal. And this is very interesting for our strategy because, and we're going to get into this in the next video, but it's all based on tracking when company insiders buy their own stock. So like I said, I traded GH right here because insiders bought in. The next day it spiked. Another stock I traded that had insider purchases was TWKS. It had insider purchases right here, and I traded it here. And the reason I was confident in the stock is because the last time insiders purchased TWKS on 11/28, not only did the stock go up the next day and then continue going up, but the stock actually had a massive spike of volume as well. And there was no other news that day. The only reason the stock went up and the only reason so many shares were traded is because an insider bought into the stock. So you can see, right, on average, 866,000 shares traded in a day. And then this day there was 5.2 million. So that just showed me that people care when insiders buy into TWKS. And so considering how well that performed last time, I thought it would do well again, which it did. I was able to make about 5% in like 10 minutes or something. So that was sweet. So the next indicator I want to look at is ATR. This stands for average trading range. Actually, it stands for average true range, but I'm just going to modify it to average trading range because I think it makes more sense. But officially, if you look it up, it is average true. So the reason I use average trading range is to understand how volatile a stock is. If I think there's an 80% probability that a stock will rise the next day, right, due to insider purchases, let's say, then the next question I have is, okay, well, what's the magnitude of the move that I should expect? Am I expecting a 1% move to happen? Am I expecting a 10% move to happen? And where do I want to put my take profits? Do I want to take profit at 1% or 5%? That's where ATR can come in, because if I show you right here, right, you can see ATR says 0.61. If I just hover over the day and look right there, 0.61. And this is a dollar amount. And then after I get that dollar amount, 0.61, I'm going to divide it by the stock price of that day, the close price, to get the percentage, which is 7.8%. So that means that TWKS in the past 5 days these basically 5 days, the stock moves on average up or down roughly 7.8%. Now here's the really cool part. If I go ahead and I take the close price from the previous day right here, and then I go to the peak right here, you see it says 11 point, roughly, let's call it 4%. Now if I take my 7.8% ATR and I multiply it by 1.5, which is 150%, the stock, or I get 11.8%, which is exactly where the stock peaked at. So what I have found throughout my live trading results and my back tests, and there's a whole video going over back tests that you can watch at the end, what I found is that on average stocks peak out at around 150% of their ATR. So this happened in this case, right? It happened in this example. Let's just get the ATR, right? So it says 0.47 for the dollar amount right here. And the stock close price was 7.85. So I get roughly 5.9%. Now let's see how much the stock went up the next day. Went up about 9%. So if I go 5.9% times 1.5, I get 8.9%. So the stock peaked out, again, roughly 150% of its ATR. So that allows me to set my take profits accordingly, because if I know that on average stocks peak out at 150%, that means I can set my take profits ranging from, let's say, 75% of its ATR all the way up to 150% of its ATR in 25% increments. So for this example, let's just do this math again. 0.47 divided by 7.85. So the ATR is 6% roughly. That means I could set my first take profit at 75% of that ATR, so roughly 4.5%. And then I could set my next take profit at 6%, which would be 100% of the ATR. And then I could set another take profit at 7 or 8%. And just basically stagger them in 25% increments all the way up to 150% ATR, where I would then take the rest of my profit, or maybe leave a little bit on the table till market close and then sell at whatever price that is. So I hope that gives you a basic understanding of how I use ATR. I'm gonna show you some more examples of all those calculations. I know for the visual learners this might be confusing because right now I'm just talking about it, but I'll actually show you some more examples. But that's how I use ATR. It gives us an idea of what move we should expect, and then because there's on average stocks peak out at 150% ATR, it really just allows us to set our take profits in a really good way to maximize profit. So let me show you one more example of that 150% ATR thing happening. GH stock. 1.67, taking that right here, divided by 26.78 right here, and I get 6.2%. I'm just going to quickly add a drawing here. So the stock peaked out at around 9.5%. If I take 6.2 and multiply by 1.5, I get 9.35%. So again, the stock peaked out just under 150% ATR. So that is how I use ATR. That's how I use volume. In the next video, I'm going to show you my double filtration process so that you can understand how I'm actually picking these stocks, GH, TWKS, and getting to the point where I'm now looking at ATR and volume.